Okay, let's go ahead and we'll get officially started here. Welcome to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and I'm really excited about this. I hope you guys are excited as well. In fact, my promise to you today is this, that in this webinar, you'll see how you can build wealth, transform your legacy, and live financially free. Those are our goals. Now, I know you probably get flooded with emails promising you help in your retirement planning and all. And you're probably skeptical and thinking, well, you know what? Whatever you're going to show us, go ahead and prove it. Well, here at VectorVest, we've been doing this a long time. In fact, VectorVest started way back in 1988. So here's a couple of examples I want to share with you. In 2017, we began building and managing and tracking a retirement growth portfolio that has averaged about 40% per year. This is a screenshot of that equity curve from just a couple of days ago. Right, it's nearly tripled in just under 5 years on our growth portfolio. Now, along with that, another portfolio which uses a strategy you'll learn about today was started a bit further back in 2013. I like to show the longer term version because it is a portfolio with a goal of income through dividend growth stocks. But this is just the capital appreciation, right? So this is nearly tripled in the just over 8 years that it's been in place. And just as a point to make here, that's 22% annualized, and that doesn't include, this equity curve does not include the nearly $50,000 in dividend payouts received over that time, nor does it include the power of reinvesting those dividends if you so choose to do that in your retirement, in your dividend growth portfolio. So some good stuff, some good numbers I'm going to share with you today. One of our clients, Jerry, told us about his ability to generate consistent monthly income now after going through our training. He went from being hit or miss with his trading and having absolutely no methodology, no rhyme or reason to it, to consistent monthly income where he's now generating 2% extra cash flow each month. And that's one of our customers. So I just want you to know that this webinar is built on results. So I'm going to show you the system we use to achieve these results. So if learning how to do that sounds good to you, I need you now. It's a great time to turn off all distractions. Close your door, turn off your cell phone, at least put it on vibrate. Close the other windows on your computer. Try not to multitask, or I'm afraid you'll miss something that we feel is really important. We want you to stay focused, give us your full attention, because you'll be learning something, I believe, here today that can make a huge positive impact on the rest of your life is what we believe here. That's why we're here. So here's how to know if you guys are in the right spot here today. Here's how you know if you're in the right spot today. Okay, you're in the right place if you're worried about the next market collapse wiping away a good chunk of your nest egg and it's causing you to be ultra conservative and not getting the gains that you see others getting. You're in the right place if you want to grow your account steadily each year, but it seems like every time you buy something, the market or the stocks that you buy go down and they go nowhere and you're just spinning your wheels. If you don't have an income source that is as steady or as big as you need it to be and it's causing you to scale back your lifestyle and not do the things you want to do, then you're in the right place. You're also in the right place if you fear that you won't be able to retire when you want and that you might need to rely on others to help take care of you. And finally, you're in the right place if you're one of the many people over 65 who still have to work. Not because you want to, but because you have to. So either you're in that position or you're worried that someday you might be. So I want to interact with you for the first time. I want to ask you guys, does any of that ring true to you? Does any of that ring a bell for you guys? Is it causing you to think about that? Let me know in the chat box. Just type in yes if any of these have rung true for you. Yeah, Scott and Detmar, it takes a second, but now they're pouring in. Yeah, a lot of yeses coming in. William, Mario, Peter. Yeah. Oh, yeah, now they're really pouring in. Okay, yeah, you guys are in the right place. I believe you're in the right place. After after literally decades of working with retirees here at VectorVest, we have identified the root cause of many of these issues. And we have found that the real problem is your retirement investing model is broken. And all it takes is a couple of minor tweaks and you can get it fixed. And once fixed, your retirement will then be on solid footing. And that's what we're going to do here today. Okay, the model we use, and by the way have proven to work, is what we call here at VectorVest the 3Ps investing model. And the 3Ps are profit, provide, and preserve. Okay, when you think of profit, you can also think of the word growth or capital appreciation. That's what we're talking to. Profit is a plan to grow your portfolio safely and steadily year over year through capital appreciation. When you think of provide, I want you to think of it as this. Think of it as providing income. Simply a system to generate consistent, safe, steady, consistent income into your portfolio. And then finally, when you think of preserve, think of the word protect or insurance, right? Preserve is a protection plan for your capital preservation. Okay, very important is the preserve side. So remember my promise from earlier to build wealth, transform your legacy, and live financially free. Well, you need to be able to grow your investments, generate income, and protect your capital. When you do all three, that's when you'll have your financial freedom. And so the first strategic shift that we have to take into hand here is the first shift you need, and that is from not being in control of your own retirement to where you take control of your retirement. Because after all, really, when you think about it, who cares more for your money, you or someone else? So you might think you don't have the time or the knowledge or the skill to do this, but you're going to see today that you can do it. First, it doesn't take a lot of time. You will have the knowledge, and I'll show you how to leverage off others so that you don't have to do everything yourself. So that's our goal here today in the session. So now that you have decided to take control, I want to walk through the 7 signs that your portfolio will not be ready for retirement. Will not be ready. Even though most people say they care more about their own money than anyone else does, well, still, what do most people end up doing? Well, first, most people trust the government and Social Security to provide the income needed to retire happily. Now, that alone has many problems. 60% of non-retired workers feel that Social Security won't even be around when they retire. Even if it is still around, the Social Security website actually states that Social Security was never intended to be someone's sole source of retirement income in the first place. Right? The average Social Security benefit is just over $1,500 a month before Medicare, and premiums are even deducted. So on average, you're left with about $16,000 a year. And obviously, that's not going to be enough. So what else do most other folks do? Well, a lot of people just save their money. You put your hard-earned money away, counting on it to be there when you retire. But with interest rates so low and not really expected to rise anytime soon, inflation is actually higher than the interest you're receiving by trying to save your money, especially now. So by saving your money, you're actually losing money because your dollars are getting devalued. And then there's this set of folks who just like to take the set it and forget it approach. Okay, they put their money into mutual funds, an IRA or 401k, and they simply hope for the best. Now, unfortunately, when the market drops and wipes out 30 or 40 or 50%, many people end up delaying retirement, or if you're already retired, some people actually have to go back to work. And when all else fails, well, you can always play the lottery, right? I remember there was a commercial which used to advertise the lottery, and it said, all it takes is $1 and a dream. Well, for many, that $1 turns into 2, then into 10, and then into 50. Right? Sometimes you end up spending a few $100s a month on those dreams, and please believe me when I tell you that is not the best retirement plan. Next, you can always hire someone to make decisions for you. That's what Rob here did, one of our subscribers. He retired in 2005. As we all know, the financial crisis hit later in 2007. And he had told us he had used a professional advisors for direct shares and a few managed funds to build up his retirement portfolio. And then they told us to ride it out. By mid 2008, our portfolio had lost 40% and our retirement plans were in ruins. We were in total despair and it looked like I'd have to leave retirement and go back and get a job. So that's what happened to our friend Bob there. Now, it might not be as dramatic a drop like Rob had, but Carol also described for us another typical result. Now, she hired a advisor in 2013 to help her manage her inheritance after her father had passed. And she said by early 2017, she finally had the time to take an in-depth look at what that broker was doing. Well, she went on to say she was shocked. It was a mishmash of cookie cutter funds. And after their fees, the net result was a mere 1% annualized rate of return during a time when the market did much better. And then finally, the last couple of signs. First, you can spend less. Right? When that happens, you end up tightening the wallet and spending less. You're cutting back on your spending because you're worried. That's another sign your portfolio is not ready for retirement. And then if you decided to work longer than you originally intended, well, another clear sign that your portfolio is not retirement ready. So if you notice through those signs, there is a definite theme here. Right? If you're exhibiting those signs, it's a clear indication that you need to take control. Remember, there are hundreds of thousands of people out there just like Rob and Carol who trusted their money to people, who thought they were more knowledgeable and more skillful, who ended up losing 40-50% of their retirement savings and not coming near to achieve the gains that they expected. So even if you have a financial advisor managing some of your nest egg, you need to pay attention. So these strategies will give you the techniques to both manage your own money as well as give you information to help you watch over the work done for you by any other money manager. So as we go through the strategies, I want you to see how they are things that you can do. And you can do these things in less than 30 minutes a week. So let's go ahead and start and we'll walk through some of this. So again, now that you've decided to take control, the first thing you need to do is protect your assets, and it falls under the preserve, right? The first P we're going to talk about is preservation of capital. You cannot grow your retirement nest egg, your portfolio, if you're unable or unwilling to preserve your capital. It's just a fact of investing and management of your net worth. Okay. So you need to protect your assets. Instead of worrying about the next market collapse wiping away your nest egg, you need a strategic defense system to protect your assets. Now, a lot of people get caught by surprise when the market drops. After it happens, unfortunately, you then hear the people on TV and advisors talk about what you should do now to try to make your money back. Right? After the fact doesn't help you much. So you need to insure yourself. Know when the market is toppy and what to do to insure yourself, just like you insure your car, your home, your health, your life. You can insure your retirement portfolio as well. I'm going to start with a look at the overall market, and I'm going all the way back to 1999. Now, let me know in the chat box. Type in the chat box if you ever bought or owned a really good stock and watched it drop when the market dropped. Just type in yes if you've seen that. Now, I'm not talking about any stock. I'm talking about a good stock that you bought and you say, wow, this is a great company that makes money. And then when you watch it drop, you're left scratching your head as you watch it fall. Right? Type, yeah, and they're all pouring in. I know everyone has. I'd be typing yes in several times already. We've all been there. Right, we've all been there. Let's zoom in on a few of the biggest market moves that crushed a lot of people over the years, just as an example here. So I'm guessing there are people in this room today who held stocks or managed funds through the bursting of the dot-com bubble. I was working on a trading desk at that time, and I remember it clearly, and I'm sure there are people in here who have lived through it as well. Well, we had one of our customers, Lynn, had told us that during the dot-com boom that he had taken $80,000 and increased it 5 to 6 times over. However, in 2000, he wrote us, I proceeded to lose almost everything over the next 2 years, and these are his words, I was pissed and needed someone to blame. Okay, now that happens way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back and you spend years trying to recover the losses. So here in 2008 is when the housing bubble burst, the financial crisis. Now at that point, the average mutual fund had dropped over 40%. 40%. And many people like Robert, who we saw before, we talked about earlier, he lost 40% of his retirement capital and thought that he'd have to leave retirement and go back to work. And then there was just last year, as we all remember, right? The S&P dropped during the pandemic sell-off up to 34%. Now I want to ask you guys, how many of you had your financial advisor call you leading up to any of these events to warn you? Right? I doubt there were many phone calls over that period telling you to become defensive or to get out. But what they do after the event passes, you might get a call saying, "Oh, by the way, you just lost 30%. Sorry." That's more the real world for us. Which brings us to today. Okay, which brings us to today. Now, many are worried about the next market collapse, and you, well, should be. Some people say you cannot time the market. Well, the truth is that you can't predict the market. But what we can do is analyze what's going on and recognize the current market trend. So even though markets on a daily basis may have ups and downs, if you look at the big picture, you can clearly see major trends in the market. And you can even see smaller trends within those bigger trends. Right? Now, we may see the market on a daily basis go up and down, but it does over time trend in a given direction. Surprisingly, you don't hear this information from talking heads on TV because they're rarely going to say, "Hey, it's time to get out. The market is on a downtrend." It's very rare that happens. Right? So I want you to be careful where you get your information. Now, it's good for their business when people are investing in the market, and advisors still get their fees, most of them, when the market goes up or down. They don't care. So you need to be careful where you get where your information comes from. Let's take a look at how to use the right information so you'll never be on the wrong side for more than a week or two on the wrong side of the market. Sorry, I had to sneeze there. What you're about to see, I believe, will ensure that your portfolio never collapses again when we walk through this. Now, you want to make sure you have a system that allows you to determine the market direction. Again, not predict, but recognize the trend. Some people use things like moving averages on the S&P 500. I use the guidance from VectorVest. Now, whatever you do, I do suggest that you don't listen to the talking heads on TV. Instead, you should have a system which is not emotional, which is based on empirical data, and which has a historical track record. So let's take a look at a few of the major market moves that we talked about earlier. And these, if you were investing at these times, these were all game changers in our lives here. Let's get started by looking back. We'll start at the bursting of the dot-com bubble. Now, every night in the VectorVest program, we provide guidance such as this. Back on March 17th of 2000, is where we're set here. Okay, that was about a week off the peak of the high. And we wrote in VectorVest in the strategy section that I believe the rally is exhausted. Downside risk outweighs upside potential. And prudent investors should protect profits and take any defensive actions such as buying puts. Consider any rallies as opportunities to sell stocks at higher prices. Now that was tremendous guidance. I think you would agree. Okay, were you investing back then? And if you were, would that have been beneficial to you at that time? Okay, that was some pretty good guidance there. Now, let's fast forward to the next big market collapse, and this was when the housing bubble burst. Right, this was the next big move. Now, on November 2nd, just days off that market top, we said that a word to new subscribers, right, was what we wrote in the strategy section. The confirmed down signal that we received yesterday could be the entree to a long bear market. Could be the entree into a long bear market. We went on to say, don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. So I'll ask again, and you can type in, but I know the answer already. Would that guidance have helped protect you? Would it have helped you protect yourself in that type of market? And then finally, let's move to the most recent drop, which as we know, happened just last year, the more dramatic drop there, back on February 14th. This was days before the peak. We noticed warning signals in the VectorVest market indicators. And in our strategy section, we said that the price of the VectorVest composite has continued to move higher this week, closing at a new record high. However, as the price hit a new high today, the buy-sell ratio closed lower. To add to that, if we look at the 3-month market timing graph, we can see that while the BSR, RT, and MTI closed higher week over week, they are at lower levels today than they were during the January high. This bearish divergence suggests that downside risk outweighs upside potential. Sound familiar? Back in the 2000 dot-com burst? And it was just a week later that in our strategy section, the guidance was prudent investors should not buy stocks at this time, and aggressive investors and traders should play the market with a bias to the downside. Okay. Again, I'll ask you, would that have been helpful? You can type in yes or no. I want you to interact with me. Would that have been helpful, that type of guidance, if you were heeding that at the time? And yeah, a bunch of yeses are coming in. Thank you guys for typing it in. It takes a second for them to show up. Yeah, I see a bunch of yeses. Definitely would have. So now that you know what to look for, now we need to know how to react to it, right? How to be proactive during these times. Let's look how to protect your entire portfolio, which we simply call portfolio insurance. So I'm going to use another big sell-off that I didn't even talk about there, and this was one that I always look back on. What seems like an eternity ago isn't that long ago. It was back in 2018. There was another big market drop towards the end of the year. So let's zoom into this period. This was early October. If you got the one way to remember it, if you do remember, was right up to Christmas Eve. This drawdown began, and it was a huge drawdown in the market. Okay, so that was that run in late 2018, and all I'm doing is zooming in a little bit more. It's that same time frame. Now, our market timing system signaled what we call a confirmed down on October the 4th of 2018. That's our most conservative overview of the market trend, our longest term trend, and it came on October the 4th. As a retiree, that's a great indication to become defensive and initiate portfolio insurance. And we do that by one simple option trade that anyone can do called buying a put option. Okay, so you would become defensive and buy an SPY put option as insurance. So we buy the put on SPY, which is an ETF that tracks the S&P 500. You can use an ETF that tracks other, major indexes like the Qs or the Russell 2000, which is IWM, but we use the SPY. So basically, if the S&P 500 continues to fall, the value of our put option will rise. Right? And as it increases in value, it offsets some of the losses on the stocks in your portfolio. It's not always dollar for dollar, but it is a significant insurance policy against the losses that you would incur if you do nothing. Okay, now in this scenario, for a $100,000 portfolio, the basic equations that we use usually have you buying 3, maybe 4 put options for each for a $100,000 portfolio. So if you were to buy 3 at this time, what it would have cost you is $604 per contract, or $1,800 for insurance of a $100,000 asset. Okay, $1,800 to protect $100,000. Now think of this way: how much do you pay each year to protect your car, right? And most likely your car isn't worth $100,000. Okay, so it's just an insurance policy on an asset, and if that asset is damaged, your insurance policy will help offset that damage. Let's take a look and see what happened. Well, at expiration of this particular option, had you held it there, your put option would have a profit of $11,900, nearly 12 grand in profits if you had bought it and held it right through expiration 90 days out. Now, that doesn't mean if you had closed that option trade anywhere in this severe drawdown that we looked at, you would have had significant profits even if you didn't hold it all the way to expiration. Right? So there's a lot of mitigating of losses there when you do that. And it's a good thing protection was in place at this time, right? Because you had an insurance policy. Now, a client I work with named Elaine wrote to me about portfolio insurance he placed, and this was at a different point at the beginning of 2018. So we've been talking about this for years, and he said, Jim, because of your teaching, I hedged my portfolio at the end of January of 18 with puts on the SPY. He said it saved a section of my portfolio. He put in less than $1,000 on S&P put options, and the market had another dramatic downturn. In January of 2018, he sold his puts just a few weeks later and took in over $23,000. So he said, my portfolio was not only saved, but brought positive. Okay. So let me ask you guys, how much would this trade have benefited you during the prior market collapse? How much would have you have benefited from that? I'm going to go ahead and take a quick sip of water while you type in. Just type in a couple of words how that would have helped you. Okay, thanks. Yeah, more than a little, Tim says. Good amount of money. Lots, Daniel says. Would have helped lots. Yeah, a lot of folks typing in. Would have helped greatly, James says. Yeah, listen, it's a wonderful feeling to know that you've got insurance in place. And, as they always say about insurance, better to have it and not need it than to need it and not have it. So that's an important strategic shift. Okay, the shift here is that you need to go from worrying about what could happen and being unprepared when it does happen to where you have a strategic defense system in place which protects your hard-earned assets. Right? Protection is an important part of your retirement investing model. To me, frankly, it is the most important part. And it's how you'll be able to build wealth, transform your legacy, and live financially free. Now, let's move on to the second P here. We're going to talk about profit now, shift gears a little bit. So we're going to talk about profit as a way to grow your portfolio. Now that you have a strategic defense system in place to protect your assets, you no longer have to be Mr. or Mrs. Ultra Conservative when investing. Instead, you'll be able to take full advantage of the market upturns so that you can grow your portfolio. Now, in the past, you might have been plagued by buying stocks that didn't go anywhere or were too volatile, causing you to just simply spin your wheels, as we talked about before. But to fix that, we need to have the mantra of buying safe stocks that are rising in price only when the market is rising. So for our retirement account, we want to look primarily at safe stocks, right? Safe companies, more so than anything else. While it's fun to hit the home run, right? Most home run hitters do what when they don't hit a home run, right? For any baseballers out there, we know, yeah, they strike out. Right? If they don't hit a home run, they strike out. We don't want to strike out. So while the home run is so enticing to some people that when they go out and invest, what happens is they end up trading in a way that's totally different than who they really are or what their objectives are and what they're looking to accomplish. So you invest like someone that you're not. So if you're not seeing the returns you want, the answer is not to go faster. Don't try to become a day trader or a short-term trader just to make your money back quickly. I liken it to when teaching my two boys who are older now, but when I teaching them how to drive, if they were struggling, I didn't tell them to smash the gas pedal to go faster. No, I told them to slow down. So we want you to do the same thing. So it all starts with this quote from our founder and mentor, Dr. Bart DeLito, has said and written many times that good portfolio management starts with buying the right stocks. So it's just like a sports team. That's why we have the sports team up here. Fill in whatever team you want, right? If you fill a team with great players and put the best team you can on the field or on the court or on the ice, whatever sport you want to use, just having those great players would help the team do well and give you a much better chance of winning. So by filling your portfolio with really good safe stocks, just those good stocks alone are going to help your portfolio. So safety, when you're looking at company safety, is of the utmost importance. And so let me share a checklist of what we look for in safe stocks. So when we're talking about safe companies, we're looking at earnings consistency is a huge factor. Doesn't the company make money quarter over quarter, year over year? We take into account things like company size and the overall price volatility of the company. Debt to equity ratio is an important factor. If a company has a favorable debt to equity ratio, they're able to take on any headwinds, whether it's the overall economy or specific to their company. So that's taken into account for a safe company. How long has the company been around? And then finally, dividend history. To be a safe stock, stock doesn't have to pay a dividend, but if it does, it darn well better continue to pay and grow that dividend, right? And so dividend history plays a big part in safety as well. So you don't need to be a stock market genius to do this. You don't even need to spend a lot of time to do it, right? As I said earlier, you're going to leverage off others. I told you didn't need to be a stock market genius, and here's how I know that. So what I'm going to do is open up my VectorVest program, and from the home page, I'm going to go to the Viewers tab, and it's going to take us to a watch list that I have created here. So in our watch list viewer, I've got about, 41 stocks to be exact. Okay. Now, these are well-known companies. I put this list together. It's made up of places, I'm sure, where you shop, where you eat, what you drink, where you spend your money in your everyday life. So whether you own the companies or are customers of the companies, I wanted to put names you would recognize. Lowe's, Home Depot, Google, Apple, Microsoft, right? You have a home or garden, you're probably going to Lowe's or Home Depot. You have computers, Surface Pro, iPad, whatever it might be. You guys get the picture, right? If you like coffee, you're going to Starbucks. I'm sure everyone here has either Amazon Prime or has ordered something on Amazon. McDonald's, you drink some Pepsi. You need an adult beverage. We've got some Anheuser-Busch here. We've got some Budweisers for you. Okay, so that is our list of stocks. Okay, now these stocks are here, and they are not only familiar, but let me show some of the power of leveraging off others, and in this case, VectorVest. So these stocks aren't just randomly listed here. They are sorted by VST. That is the master indicator in the VectorVest program on how we rank and analyze stocks. It takes into account value, safety, timing, and gives us that flagship indicator on a 0 to 2 scale. So that's the default sort here. The very best of that combination comes to the top. Okay. However, as a retiree or somebody who's investing with a retirement-minded outlook, we can be even safer than that. VectorVest has an indicator that focuses on all of those components I went through for stock safety. Okay. So what I'm going to do is click on this column RS. That indicator is relative safety, and once I resort the list by relative safety, the safest stocks will appear at the top of the list. Right? The consistency and predictability of financial performance are the factors that go into the relative safety ranking. So now you'll see, again, they're all familiar companies, but now we'll see them sorted with the highest relative safety shares coming to the top of the list. Now, what I'd like to do here, now this is as we speak, right? This is in real time. What I'd like to do here is first change the date. I have the ability to change the date here, and we can go back in time. I'm going to go back a couple of years. I kind of randomly chose January of 2019. It's almost 3 years look back. It gives us the ability to see different market conditions, good bull market runs, the sell-offs, to get a sense of how these stocks would perform over that time frame. So you'll see we're still sorted by relative safety. On that date, I can go ahead here and click in this local toolbar, quick test the top 10. When I click that button, what it does is take me from point A to point B and shows me how those stocks performed from the close. Visa closed at 132.92 on 1/2 of 19, and then is trading right now at 230 and a quarter. So that list of stocks is up 80%, right? Because we're not going to go out and buy all 40 stocks. That's why I'm choosing the top 10 by relative safety. Now, a lot of folks, and we like to compare it to the S&P 500, which is up 78% over that same time frame. Okay, again, this is with no money management techniques, by the way. Okay, so just about 80%. Now, to illustrate the power of relative safety, what I can do is click on relative safety again, and what it does is take our 41 well-known companies and now sorts it with the worst relative safety indicator coming to the top. So now the top 10 or more, the relative safety is actually below 1, which is unfavorable on our 0 to 2 scale. So let me take that same list, and now let's, from that same date, and quick test the top 10 here. Now we're still profitable, still up from that date to this, but there's only 6 winners. We had 4 losers here, and it's only up 29%. So well below the top RS stocks, and certainly well below the S&P 500. So just a quick illustration on a quick test of what the power of relative safety can do for us. Okay, what I want to do next here in the program is I'm going to go to our scroll up a little bit and go to our stock viewer. Now in the stock viewer, what we have here is the ability to track. We're tracking almost 9,000 stocks now in our US database. And again, the default sort is VST, descending. The highest VST stocks come to the top of the list. I can also sort this entire program of nearly 9,000 stocks by relative safety. So what I want to do is use the same time frame. So instead of narrowing it down just to the top 40 stocks like I had in the watch list, let's take this back to January of 19. So we're going to use the same trade date. This is what the list looked like. Back then we were tracking about 7,000 stocks, and it's sorted by VST. What I'm going to do back on that date is click on the RS column, and sorted by RS, this is what the list looked like at the close of trading on January 2nd, 2019. Let's go ahead and quick test those. All right. So now what we see are even a bigger gain than the S&P. It was just slightly above earlier. That's a significant move, almost over 25%. Even better here with taking the best of the best, right? The best relative safety stocks out of 7,000 instead of just 40 that we did on the first try. I enjoy being able to click on the percent price gain, and we can actually see the best performers of those still the same top 10 stocks, up over 100%, 106%. It's 40% annualized. So again, some very recognizable names here. And then what I like to do is if I right click on the top stock, FTNT, I can bring it into a graph. And what I have here is a 1-year graph of FTNT. And what we see are earnings per share moving from that lower left to upper right in a northeasterly direction on the price of the stock. I can take it back to 5 years. Right? If we take off some of the extra things here, we can get that look. This is what we're looking for. Right? This is what high relative safety stocks do for our portfolio. And all of those relative safety stocks all have that very similar pattern. It's not a coincidence that as earnings per share rise, so too does the price of the underlying stock. Okay. So when we go back into the program, we take a look at a retirement growth portfolio that I talked about earlier, where we buy good stocks only when the market is rising. By doing that, we minimize drawdowns and we still have tremendous growth. Now, this portfolio that's been in place for just under 5 years has averaged 40% per year. Annualized rate of return of 40%. I don't know if you guys are familiar with the rule of 72. If you make 10% per year, it would take 7.2 years to double your money. And if you make 20% per year, it takes 3.6 years. and so on. If you make 36% per year, it would take you only 2 years to double your money. Right? Imagine that. So this is just under 5 years, and we've nearly tripled this portfolio. In fact, this was from a few days ago. As of today, this is up 200% actually, this portfolio. So imagine that. Your question might be, are we rigging this? And the answer, quite honestly, is yes. Right? It is rigged in your favor. How is it rigged? Because you're buying safe stocks that are rising in price in a rising market. So if you could double your money every 3 years buying safe stocks, how do you think that would affect your retirement? If you could double your money every 3 years. And yeah, it takes a second for the chats to come in. Yeah, it would be awesome, right? It would be wonderful, Alfred says. Scott said, what if you're taking money out to live on? Yeah, there's a lot of calculations you need to do. And that's why, Scott, while they don't go too far into that here, it's why it's so important to continue to grow. And it's a great segue question into the next portion we're going to talk about here. So thank you for that point. But if you're taking money out to live on, that's where we're going to talk about providing that income. Okay, so a great comment and a great way to segue into our next session. But before I do, remember that strategic shift to get away from that slow and stagnant or lack of growth at all, right? We have to make that shift, that strategic shift, to go from slow and stagnant to where you have a solid growth portfolio strategy that has you buying good, safe stocks at the right time so you can steadily grow your portfolio. It's another important part of your retirement investing model, which will allow you to build wealth, transform your legacy, and live financially free. Let's go to the third P in our retirement investing model, and that is provide. It's a great segue from Scott's comment there. Remember, you don't want to rely on your pension or Social Security to carry you through retirement. In order to continue living the lifestyle you're used to, the lifestyle you deserve, you need to open up new income streams. And there are two main ways that you'll do that. First, you want to get paid through dividends. Right? One of the benefits in focusing on safe stocks is they typically pay a nice dividend to the shareholders, and you want to capitalize on that. And I know everyone knows all about dividends, right? But finding the best dividend paying stocks for a lot of people isn't the easiest thing to do. For example, one of the mistakes that's often made is, like, if you go to Google and if you Google good dividend stocks, look at the results that you get. You get 850,000. But here you just get the highest yield. They all just sort, all these sites just sort them by the highest current dividend yield. What they don't tell you is the company, is it a quality company? Are those dividends safe? Right? You can go to nasdaq.com, you get something similar here. I don't have it all here, but you see the highest yield. But is the dividend safe? Is the company safe? Okay, other sites do the same thing, but they don't tell you anything about the company. So let me show you one of the things we do here at VectorVest. Now this is an example of inside the VectorVest software. We have a bunch of pre-built watch lists for you. And as an example, you see here a list of all the companies. This 25 DRIP stands for Dividend Reinvestment Plan. These are companies that have not only paid but have grown their dividend for at least 25 years or longer. And once again, they're not sorted just randomly here. The default sort is VST, right? The Value Safety Timing Indicator. So the stocks are sorted so that the best combination of value, safety, and timing come to the top. Now, right now, as the time of this screenshot was taken, West Pharmaceuticals, which is, it's a great company. I took a screenshot of the graph. Now, this graph goes all the way back to 1995. I actually own this stock, and what we have now, instead of earnings per share down on the subgraph, is the dividend growth. So you can see as the years go by, West Pharmaceuticals continues to grow their dividend. Right? Not only pay it, but continues to grow it. And again, why? Because their earnings growth rate is very strong and they have the ability to grow that dividend and continue to pay. And so the stock price keeps moving to the upside. Okay. In fact, much like the growth portfolio, as I showed earlier when we first began, it's called the dividend growth portfolio because not only getting growing dividends, but you're also getting capital appreciation from here. So as a retiree, those are two things that you really want and need. Notice the portfolio has this gain. Again, this is from a few days ago. We broke just over 190% now in this particular portfolio that we track, that we built and manage in our Tuesday coaching sessions for retirement. Now what this does, this is just capital appreciation, by the way. What this number, which is almost tripled, and this again, this is a longer time frame, does not include nearly $50,000 that I've calculated in dividend payouts. So if we round that to 190,000, add another 45 to 50,000 to that number, right? So that number jumps dramatically. So think about that. You're averaging an additional $5,800 in income each year through dividends. That comes to about $490 a month. Now, would an extra $490 a month help you out? It would help me. It does. It helps me. And that doesn't even include the power of reinvesting those dividends. So to Scott's point, you don't have to reinvest them. You can pull money out as long as you have a steady income. Which leads me to the second source of income, and we refer to it as collecting rent from the stocks that you own. Right? So you'll use one of the safest, the most popular option income trades available to you. And it's so safe, it's the main option trade that retirement accounts will allow you to do. I was telling someone the story earlier. I took my Series 7 back in 1992, and back then that was the only option trade they would allow you to do in an IRA account because there was no added risk to just owning a stock. There was no added risk at all. Now you can do a lot of option trades in your retirement account. It's a very basic trade. It's easy to do. But selling covered calls is an excellent way to generate added income. So let's take a quick look and see how a covered call works for those who might not be familiar. Please understand, you don't have to be an options expert to learn how to do this. It is one of the most basic option income trades there is. So let me walk through it. Here's a graph of a stock, just ABC stock, XYZ, whatever. It's trading at $176 per share. Instead of just owning the stock and hoping it goes up, you can sell a covered call. Right? So if you own, it's got to be at least 100 shares to sell one contract. So if you own or buy 100 shares of a stock, okay, that's what you have to do the covered call. Now, for those who may be new to covered calls, the quick definition is, and this is all you have to understand, is someone out there is willing to pay you money today for the right to take your stock away at a higher price at a future date. Right? They're buying the right. They buy a call option. They buy the right to call away your 100 shares of stock at a certain price by a certain date. Okay, and they're going to pay you for that. Let's take a look at what it looks like. So, for example, if you sell someone the right to buy your 100 shares, if the stock price at this point, if we sell the 180 strike price, which is where we strike the deal, right? I'm the seller of the call option. The buyer says, hey, I'll pay you $10.33 a share for one contract. That's $1,033. I will pay you that today to take your stock away at a higher price than it's currently trading. Okay. So you just pocketed $1,000 for the right for someone to take your stock away. Well, what can happen to you if you do that? Well, first of all, the profits from the call option you sold give you a cushion, and it would still have a stop in place just like you would on any stock. You would take defensive actions on any stock that you own. Okay, so but you do have a cushion in a sideways or nervous market there. You generate that income. What if the stock goes sideways? Well, that's fine. You get to keep the $1,000 plus you can turn around and sell another covered call and take in even more income. What that does is lower the cost basis on the stock as well. And then finally, if the stock goes up, well, that's great. You make what we would refer to as the max profit. You get to keep the $1,000, $1,033, and the gains in the stock that the stock went up, the extra $4 plus the $10.33. right? At expiration, they would take your stock away at $176. I'm sorry, at $180, I should say. So by doing this each month with a 10 stock portfolio of about 10 positions, 100 grand, you can be looking at roughly $1,500 per month of income. It's a great income stream. We talked about Jerry earlier. In fact, he, as we said, prior to learning this income strategy, he told us his investing was hit or miss and had no methodology. What two worse phrases are there to describe your retirement plan than hit or miss with no methodology? And Jerry went from that to consistent monthly income, roughly 2% extra income each month. So this time I have two questions for you that I want you to interact with me in the chat box. First, how many extra income taps do you have open right now? And by taps, I mean like a water tap, right? Do you have income coming in? Right? How many do you have open right now? And second, what would that extra income allow you to do? Or to put another way, what would the extra income allow you to stop doing? Go to the chat box for me and type in a couple of words for your answer there. All right, great. Yeah, they're coming in now. Yep. Alfred says he has no extra taps open. Extra income would allow me to retire early. Daniel says. Maurice says talking about call options, right? Well, we're talking about selling calls here, Maurice. And yeah, Scott's hitting home there. He says, more time with the grandkids. Right? So yeah, these are some of the things that it allows you to do. Right? We keep talking about live financially free. That's what we're talking about. Spending more time with the grandkids, doing what you want to do. So here's the strategic shift. Right? You go from not enough income when you implement this provide piece to your investment model. You'll be able to shift from not having enough income to where you have a steady flow of consistent income, which will allow you to continue living that lifestyle you're used to. And again, becoming financially free. Okay, so I think you guys showed up here today for a few reasons, my experience tells me. One reason is you're worried about the next market collapse wiping away that chunk of your nest egg, and that's causing you to be so conservative that you're not able to see the gains that others are getting. You're not able to realize those gains. You're here because you want to grow your account, but it feels like you're just stuck in the mud here, just spinning your wheels. You may be here because you don't have enough income to replace the paycheck you were getting if you have retired already. And there's always that fear that you'll have to scale back your lifestyle or you might need to rely on others. Maybe you're doing okay right now, but you're still not quite where you want to be. And then finally, you may be here because you don't have a plan to get there. You may not have a plan to get there. So today, I hope that you learned that it is possible to take control of your retirement when you have a clear path. I also hope that you learned you don't need to be worried about a market collapse when you have a strategic defense system in place. I hope that you learned today that you can see steady growth in your portfolio by using a solid growth strategy. And finally, how you can generate that consistent income with new income streams using dividends and covered calls. And the main thing I hope you learned today is that the secret to build wealth, transform your legacy, and live financially free is to make sure that your retirement investing model includes the VectorVest 3 Ps of profit, provide, and preserve. So that brings me to the obvious question that you're asking right now, or you should be asking right now. How do I create this type of system in my retirement portfolio right now? How do I do that? Well, I believe that you do have a choice. You can choose to do absolutely nothing and keep going the way you are, but the same thinking will get you the same results, as they say. My fear is that you'll be in the exact same place this time next year worrying if you'll have enough money when you retire. You can choose to do it alone. Maybe put together some of the things you learned today and learn it by trial and error, but mistakes can be very costly. Or you can choose to do what I did, what Jerry did, and thousands of others have done, and that is to get right to the solution. Why do all the work on your own when there's training available that allows you to bypass all the trial and error and to get success much quicker? So instead of taking the long way from where you are to where you want to be, learn how to take the shortcut. That way you can get your retirement on solid footing much more quickly. Now, I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I would get you to do. And it's a simple plan called the Retirement Portfolio Transformation. Now, let me start here. Before we get to that, I need to point something out. Albert Einstein said that everything should be made as simple as possible, but not simpler. So it is important you understand that this is not a get-rich-quick scheme. It's not some magic pill where you should expect results in the next 24 hours. This is a serious effort, and it requires effort on your part. If you're not going to commit to it, then don't do it. It's not for you. And you can log off now. Okay, this is for serious people who take their retirement seriously and who are willing to put time and effort to learn the system. But this is why VectorVest was created and why we have put together this retirement portfolio transformation for you. We put it together for serious people who want a simple plan to set up their retirement portfolio for success. The system works, but you got to do work. There is no magic pill. Okay? There's no such thing as go to bed fat and take a pill and wake up thin. That doesn't work. There is work in the real world. So you need a plan, and if you're willing to do the plan, then you'll get results every single time. So by transforming your portfolio, again, you'll be able to meet the goals of building wealth for you and your family, transforming your legacy, and create a better life for your children and for your grandchildren so that you have that financial freedom. It's a simple plan called the Retirement Portfolio Transformation. The easiest way to explain the course for me is usually just to map it out quickly for you. So Module 1, of course it takes into account all the 3 P's. Module 1 is the foundation builder here. Here's where we set our clear goals. Right? You have to set your goals and objectives. Remember, a great quote that I've come across is that a goal without a plan is just a wish. That's all it is. And in Module 1, you'll learn how to treat your investing as a business. You'll set, from the old set, what's called SMART goals and create your vision statement. Next, you'll learn how to increase your capital with a safe growth portfolio. For your portfolio to steadily grow every year, you need to fill it with the right stocks. You got to put the right players on the field, and you have to manage them. In this module, we'll show you a tried and true process so you can complete your profit transformation. We'll find the right stocks at the right time, and more importantly, how to manage them once we own them. In Module 3, we'll talk about the provide transformation by learning how to build and manage your prudent dividend growth portfolio. There are very important qualities and characteristics that good dividend stocks have, and we'll show you how to identify them. Using the VectorVest program, we'll find the best candidates and, again, how to manage them. The outcome of this module is you'll know exactly how to identify the very best dividend candidates. You'll know when to buy them and when to manage them. Then comes modules number 4 and 5, very powerful. In Module 4, we'll complete your provide transformation by teaching you 2 of our go-to option income trades. The covered call, which I talked about, and a very similar trade, similar risk-reward profile, is just selling put options against underlying stocks. So every retiree needs an additional source of steady, reliable income. Banks, bonds, Social Security, they're not going to be enough. So even if you never traded options, this is important. These option trades do not mean you need to be an options expert. It's not an options course per se. It is to show you the covered call, how and when to place the trade, and in this case we'll talk about selling put options as well. Right? how to implement them, and how to correctly set them up and manage them. And then finally, in module number 5, we're going to delve deeper into the portfolio insurance, how to eliminate risk with one trade. Okay. A lot of people don't have a plan, as we talked about earlier, when the market goes against them. You don't want to just sit there and worry about what could happen. You have to be proactive to take control. And in this module, we'll complete your retirement transformation by teaching you how to preserve your net worth. Okay. The great hedge fund manager Ray Dalio said, you can't grow your portfolio without taking some risk, and you certainly can't keep your portfolio and your capital without knowing how to be defensive. Okay. Perhaps the most important module there. So by learning all of this, at the end of the course, you'll know how to grow your account, generate income, and protect your capital in all market conditions. And so here's the thing. If I were to work with you, as I said, one-on-one for 5 weeks, literally just me and you together, going all through this kind of a la carte would cost you $29.95, almost $3,000. Okay, so here's what I'd like. Here's what I'd like to do. I'd like to give you access to the full retirement transformation course. We've put together the entire course in a self-paced, recorded atmosphere. In addition to the course, you get a few limited time bonuses when you register today. Bonus number 1, this is my favorite part of the courses we do here at VectorVest, is the live mastery support sessions. So you have access to the recorded versions of each module, each lesson, but then we have a live mastery support to help you implement those techniques and to answer any and all questions that you have. Okay, if you can't make those sessions live, don't worry about it. We have a dedicated email bin that you can send questions to that we'll answer during the live session. We also record that session and we archive it into the VectorVest University where the resources for the course are found, which I'll show you in a moment. Bonus number 2 is that you'll also get 5 weeks access to my members only group coaching sessions that we hold every Tuesday at 2 p.m. Eastern Time, where we actually go through each week to find, select, and set up our income trades. We also manage our dividend portfolio, our growth portfolio. So each week you'll see everything in action. So you're invited to 5 of those while the course is in session. Okay. Plus, if you're here and you don't already have access to VectorVest, I'll give you access to the software that I use to help speed things up. Folks, this is also completely guaranteed. You probably won't need this, but if for some reason you take our retirement portfolio transformation course and you actually do what I teach you, here's the thing, and I need you to focus on this. Not if you buy it, but if you actually do it, okay, it will work for you. If for some crazy reason it doesn't work for you, if you're like the 1% that it doesn't work for and you feel we haven't taught you how to set yourself up for a secure retirement, just send us an email within 7 days after the course ends and we'll give you all of your money back. Right? That gives you the peace of mind. And it also hopefully shows you how confident we are that you'll love what you get here and you're not locked into any contracts with us. And they say there's no such thing as a risk-free trade, which is true, but this trade here actually is risk-free. So the total value of everything I'm talking about is about $4,300. Here's what I'd love to do. I'd like to give you access to the full course and all the bonuses for $595. That's an early bird special price, which is only good through Monday. But since you've spent an hour with me today, I appreciate you doing that. So here's what I'd like to do just for you. If you order before the end of the webinar today, okay, we're going to go from that $595. We're going to take another $100 off, and you can get it for just $495. Now we're going to be on here and answer any and all questions you guys have. So we'll be on here for a little while longer. If you go ahead and go to vectorvest.com/transform, you'll be able to go through there. Now, John has put into the chat box that link, www.vectorvest.com/transform, and you can go ahead and click that link and get to the order page. Okay. So that's a today only webinar deal. Save $100. We're going to be here for a little while to answer questions. So um, there's an old saying that the best time to plant an oak tree is 20 years ago, so that you can sit under it today and enjoy the shade. Do you know when the second best time to plant that tree? Yeah, there, a couple came up. It's today. It's not too late to begin to prepare yourself for retirement. I'll ask this question, but you need to ask yourself this question. How much did it cost you back in 2000, 2008, February of 2020 by not having any of this information? How much did it cost you? Now, if the answer to that question, if that number is more than $495, let's just fix things now once and for all. Let's make it so you never have to experience 2008 or even 2020 ever again. Let's make it so that this is the year you begin to safely grow your retirement and generate consistent income month after month. Okay, so here's what I'd like to do right now. Again, go to the VectorVest.com/transform and enter your details there. Okay, you remember Robert from earlier? After he learned the information we teach in the retirement transformation, this is what he had to say. He said, I realized I could not rely on others and that I had to take personal responsibility for my own investments. In March of '09, using VectorVest's unique market timing system with its fundamental and technical analysis, stock picking techniques, I went into the market, and by the end of that year, I'd recouped all my global financial crisis losses. I've been relying on VectorVest since, and now spend 15 to 30 minutes a day using VectorVest to manage my retirement portfolio, giving me the money and time to do the things that are really important to me. So, like I said, that's my plan, a self-paced retirement transformation series. If you order before the end of the webinar, you can get it for only $495 with a money-back guarantee. So let me summarize it quickly for you. VectorVest was started in 1988 with the hope of delivering great investing and trading opportunities to Main Street. That was the goal when we began. Over the next 5 weeks, I'll show you how to set yourself up for a secure retirement. There's an old saying that wealthy people spend money to save time, and that poor people spend time to save money. That is one of the big benefits of all this. It puts all the tools you need in one place to save you a lot of time. You'll know how to grow your account, generate income, and protect your capital. So just go to VectorVest.com/transform and take a step towards financial independence. We'd love to see you with us, and we look forward to working with you. Thank you for taking the time to be here. If you know that this is right for you and you're joining me, go ahead and type just 2 words into the chat box. Type in, I'm in. I'd love to give you a shout out, welcome you to the class by name, and let you know what to keep an eye out for once you sign up from that link at VectorVest.com/transform. Okay, well, from here, I'm going to ask my friend and colleague, Mr. Brian D'Amico, to come in. He and John Marabu have been kind enough to help answer questions in the background. I'm going to ask Brian to come in and help me get through any questions that he or I might have missed. And so, Brian,
hello, Jim.
Hey, Brian, how you doing?
Thank you doing, man.
Good.
Great presentation.
Thank you.
I don't know if you saw it, but Alfred, I think it was Alfred. Let me find it in the chat box. Yep. He said, Alfred says, wonderful seminar. And he put 5 different exclamation points.
Oh,
5 exclamation points at the end.
Thank you. I appreciate it. Thank you very much.
Yep. Thank you for that feedback, Alfred. And if for those of you who are in, welcome aboard. I see Antonio is typing in. He's in. I think William had said he's coming in. So if you're in as well, check your email, because there's a welcome email that should get sent out within minutes of you entering your order. It'll have all the details. It'll have the dates and the times of any of those live sessions that Jim was talking about. The directions to get to the course. Really, you just have to go to university.vectorvest.com and log in there, and you should see the course. And you could get immediate access. You do get immediate access. So you could start going through all the material right now. Jim has recorded all the modules in advance so that you can get in there and start going through it immediately. And that way you are up to speed on at least a bunch of stuff before the first live session that Jim has with you That first live session is going to be Tuesday, September 7th, because the market is closed on the 6th. Typically, Jim will hold his sessions on a Monday, but the first session will be on a Tuesday, the 7th at noon. That way the market is open. So that gives you about a week and a half or so to start going through all the material. You can go slow, but you can get in there tonight. Get in there and start doing it right away. A couple of housekeeping items before I jump over to Jim and give him some of the questions from the chat. That $4.95 rate is there until this webinar is over. The webinar will probably be done in about 10 minutes or so once we get through the Q&A here. So the $4.95 is actually lower than our elite rate. I saw there was a question from Dave about elite pricing. The elite price is like $497.50 because that's half the regular price. So this is actually lower than that. All right, $4.95, but the $4.95 will only be available until we wrap up today. Then it will go to $5.95, and the $5.95 rate will be there until Monday, so just a few days from now, at which point it would bump up to $7.95, and it'll stay $7.95 for just about 24 hours. And then registration closes, a bunch of the bonuses go away, and the price goes back to regular price, which is $995. And like I said, a bunch of the bonuses go away. All right. That being said, I'm going to look over here at the chat box, Mr. Penna, and the first question that I see is from Tom, and he's wondering, "Hey, I'm in Canada. Is this course good for me if I'm preparing for retirement in Canada?"
Hi, Scott. Yes, that's a great question, and my answer is or Tom, is it Tom or Scott? I see a couple of names up here. Yes, it is. It is applicable. The concepts that we use here, especially for dividend growth, there's a lot of good quality dividend companies in Canada. VectorVest will help you do it, and the course will help you there. As far as the growth portfolio, the same. So it is there. The only difference, the only thing that I'll even mention is when we talk about selling covered calls. Right, the options market in the U.S. is a little more liquid. Not that the main companies in Canada that you can't sell covered calls against them, you certainly can, and the ability to buy put options on individual stocks is there for you as well. So that's the only thing that's a little bit different. But I always feel compelled to at least mention that. But otherwise, the concepts and everything we do certainly relate to the Canadian market as well.
All right. Now, Jim, I think as I scroll back, one of the first questions was, when do the live sessions start? And I tried to answer that a moment ago, but and there was another person who asked what time they are, and that's why it was mentioned they start at noon. So a couple of people are asking about these live sessions that you're doing. So I have a couple of questions for you as the instructor of this, who's taught this for a while. Number one, if somebody can't make it to a live session, are they going to be very far behind? Are they missing out on a ton? And if they do miss a live session, what can they do? Can they still ask questions? Can they still get help? So how would you address people who are wondering if they should still sign up, even if they can't make it to all the live sessions?
Yes. If you're thinking about signing up, don't not sign up because of that. And here's why. The live sessions are very helpful. It gives us the opportunity to implement and employ the concepts you learn in the module. What you have to remember is what we do is we record that, obviously, and we archive it into the university where all of the resources for the course are found, which I'm sure I'll bring up before we're done here. So later let's say early evening that day, late afternoon, early evening that day, you'll have the live session available to you, so you'll never miss anything. The other great thing is our dedicated email bin that you will have access to allows you to send questions in. So let's say maybe that on whatever Monday it might be, you can't be there, but you have a specific question you'd like me to walk through. Send it to the email bin. I'll go through it in the live session, and then you can come back when you have the chance to watch it. Remember, this isn't a day trading course, right? So if the live session allows me to implement and show things in real time, but you're not missing anything, right? I'm not doing any type of day trading or anything. So everything that you'll need, you'll get to see, even if you miss that live session.
All right. Now, and Jim, you mentioned there's a private email address. So how is that different than the just the regular VectorVest support email address?
Yeah, the dedicated email to the retirement transformation portfolio transformation course, it allows us, me and John and Brian and a handful of others, to go through and be able to address them a bit quicker. That's really what it is. I have several email bins. The first ones I open are the dedicated email bins, and we go through and we try to answer those quicker. So it just allows for better support for those who join us in the class.
Yeah, I think that's a huge resource. That it's like going
Yeah,
directly to the instructors
yeah,
instead of, we've got a great support team here at VectorVest,
we do.
but sometimes they don't know all the. I mean, they didn't take their Series 7 a couple decades ago. They
Right,
haven't been
right,
teaching people for 20 years.
right.
So
And
it's great to go directly to you and your team.
yeah, so you'll get us directly, and then the other thing to that is, listen, they do a great job, but they have a lot of different things to handle on product support. Instead of going right to that email, you come to us, we see it, we're going to know exactly what you're addressing, as Brian said, and so it's a big help for you.
Now, Jim, I saw a great question earlier on from somebody asking about how big of an account, and I, I didn't chuckle internally, but I was thinking, I was trying to teach my kids, and they're going and same with you, Jim. You've got kids a little bit older than
Yeah.
mine,
Hmm.
but still younger. You want to get them started as soon as possible, like as soon as you can, start putting money away and creating an account. This person in the chat box says, "Can I do these things with a $25,000 account?" So, what would you say to that?
Yeah, I would say you certainly can. Now, this is the first thing that comes to mind when we talk about account sizes. Brian and I also do the options course, the beginner's options course. So there's leverage there. So the lower account sizes are easier to do. But 25,000, you should, without a doubt, you should be applying the concepts and techniques that we talk about in the course. It's all relative, right? Whether it's $1 million account or a $25,000 account, you're putting your money in using a plan that will help grow that money. Okay, percentages are percentages. It's all relative, and I would say that it's all the more reason to put it away and begin to build it. So $25,000 is enough to allocate. And again, you don't have to allocate. We could delve much deeper in the course itself about asset allocation, but it doesn't mean you have to have $100,000 or $200,000 in all three different types of core strategies. You'll choose the ones that you're most comfortable with. In fact, many of them you can combine. But these are all things we go through in the course and through the mastery sessions. But if you got 25 grand and you're looking to grow it and protect it, you're in the right place.
Fantastic answer, Mr. Penna.
Thank you very much.
Okay, so we got a few more people who are saying I'm in. Antonio, William got his order finished. So welcome to both of you into the course. Now, I'm looking, and it looks the one just popped in, Jim, and it might be the last one for the night. But Mario is very familiar with VectorVest, and he must be in Canada because he's familiar with Stan Heller, our Canadian consultant over there
Hmm.
or up there. He says Stan Heller mentions a master retirement watch list that's exclusively in Canada. Is this watch list going to be available throughout or through this program?
Yeah, the watch list itself will not be available. In Canada, Stan goes through, and for those who may not know, a master retirement watch list is simply taking stocks from several different quality retirement minded searches and taking those top stocks and putting it into a watch list. We talk about doing that here, and I'll certainly show you how to do that. Stan is he's a special guy. He builds it, he refreshes it every week in Canada. So yes, the Canadian program, which you will have access to if you're in Canada, you'll have access to both U.S. and Canada. So you will have access to Stan's master watch list, and you'll certainly have access on how to build one here. Um, but Great question. And yes, the short answer is yes, you will have access to Canadian program and to the watch list you're referring to.
Very good. And it looks like Abdul just snuck in his comment. He says, I'm in.
Welcome, Abdul.
So, yeah. And Mario says, glad to hear about the watch list. Thank you for that,
Great.
Mario, letting us know that you heard.
Yeah.
All right. Well, Jim, it looks like that's about it as far as questions. So I'm just going to turn it over to you, Mr. Penna, to say whatever you want, wrap things up for the night, and we'll head out.
All right, great. Well, I just want to start by saying for those who are here, thank you for taking the time to be here. Um, you know, we, we are really excited about this launch of the retirement portfolio transformation. We're adding some things, presenting it a little differently. We think we have improved that. So if you're thinking about joining, you know, do it now so you get that 495. If not, you can still join. You got till Monday. You'll still be able to get the 595 rate. But either way, thanks for taking the time, and hopefully you've at least got some concepts and some nuances that will help you. I hope to see you in the course. Either way, stay safe, stay healthy. Thanks for taking the time to be here, and we'll see you guys next time. Thanks, everyone.